Good morning, everyone. Now, imagine a God appear and said that he would give you a wish. Then, what would you wish for? Just think about it for a second. Now, raise your hand if you would wish for 10 more wishes. I mean, who wouldn't, right? So, the story of money and investment is quite similar. It's about taking a dollar and turning it into a 10, then 1,000, and just so forth. When I was 17, I had a small saving of about 500 USD, and I wanted that money to make more money. Yes, the idea of money makes money fascinated me. It's like planting a seed and watching it blossom into a tree. Then I told my dad that I decided to invest in the financial market. I wanted my 500 USD to become 1,000 next year, and a year after that, and a year after that. I expected it to double again. But my dad said, that's very difficult. Are you sure? You know that the bank deposit interest rate is only about 6% per year. So how can you expect to double it in the long term? Yeah, but I was very stubborn at that time and insisted that I could do it easily. I bought many kinds of things, cryptocurrencies, stocks, etc. And of course, I didn't understand why I was buying it. Maybe it was because the name sounded cool? Yeah, and as you can guess, I lost money. Half of my initial amount, actually. So, that was my first experience with what I call investment. A little bit of a rocky start, but I learned a thing or two. That is, investment seems like an easy thing to jump into, but in reality, it's not. It's crucial to have reasonable expectations and knowledge before going into it, as a lack of that will lead to failure and a lot of losses. Then I went to university. I started studying courses related to investment in general and securities in particular. Then my lecturer pointed out a problem that he considered extremely serious for the majority of investors in Vietnam. That is, they have a very high expectation about the level of return from financial market, and most of them do not invest in the real value of a company, but only trade for profit as a form of speculation. Well, losing money in financial investment may sound serious, right? But what is more serious is the mentality of wanting to recoup the lost money. This can lead them to lose even more money, or worse, fall into financial scams. Let me explain this. According to statistics from masterinvestor.co.uk, top performing mutual funds today, even with decades of experience, only have an average annual return of about 15% per year. However, according to the victims' testimonies, scammers promised returns that were several times higher than the above figure. It is certainly an attractive offer, right? But not realistic. It raises a big question about its feasibility. Okay, I agree that there are some short periods when the investment market performs well and the annual return for that year is better than normal. However, maintaining a steady average return of about 15% per year in the long term is a real challenge for many people, especially for the non-professionals. And it is wrong to think that only people with no financial knowledge are scammed. According to a research by Leah et al. In 2009, people with high education and good risk assessment skills still fall for scams for various reasons. Having investment knowledge can even be a factor that increases the likelihood of becoming a victim, as they may become overconfident, subjective, and less careful. In our daily life, we are usually intelligent enough to make judgments about various issues. However, at certain times, we can be easily become victim of scam. So, what I'm trying to say here is that when entering the financial market, in addition to having knowledge to avoid losses, we need to have reasonable expectations to avoid becoming a victim of scam. Scammers are skilled at exploiting our vulnerabilities. They prey on our hopes, our fears, and weaknesses. We may recognize the risk, but we are blinded by our hope and desire. It is the fact that at the moment we invest in the wrong way, we still think that we are spending money wisely because in that situation, many factors such as emotion and belief can cloud our judgment. And then when looking back, we often wonder why we didn't see the warning sign sooner. So what is the key issue here? When talking about asset and capital, in addition to financial asset, we also have human capital. Financial asset in this context can be simply understood as like money, stocks, bonds, etc. And human capital refers to our valuable skills or knowledge. So focusing too much on financial investment only instead of investing in human development is losing many opportunity costs, while investing in human capital can bring higher growth, less risk, and be more sustainable than financial assets. And I believe that education in investment and asset management should not be limited to adults only, as it is a valuable skill that can benefit all kinds of individuals. So you don't need to know as deeply as an expert in financial field, but at least having investment knowledge would help you optimize your money wisely and avoid being victim of scam. So diversifying investment, including investing in human capital, which can bring higher growth, less risk, and be more sustainable than financial assets. Remember, it's never too early to start investing. In fact, it's even greater to start young. Let the words of Benjamin Franklin guide us. An investment in knowledge pays the best interest. Thank you for listening.